Hey everyone, welcome back to Corporate Decoder. Today we are going to dive into a shareholder report and see if this fund is producing the kinds of returns people expect. You know, speaking of expectations, I once invested in a company that promised to deliver my groceries by drone. Let's just say Gravity had other plans. Hopefully this report is grounded in reality. This report covers Alger Global Equity Fund's performance for the 6 months leading up to April 30, 2025. We'll break down what impacted the fund's returns, how they compare to their benchmarks, and where they're putting their money. If you appreciate getting straight insights into these financial documents, make sure to subscribe. We also have a Discord community linked in the description below, so come join the discussion. This report contains important information about the Alger Global Equity Fund, so let's get started. Right off the bat, it mentions you can find even more information on their website or by calling them. They really want you to have all the facts. First, let's talk about costs. For every $10,000 invested in the Alger Global Equity Fund Class A, you'd pay 59 costs eat into your returns. Class C shareholders pay significantly more at $110 or to 25%. The difference occurs due to distribution fees. Class C has higher costs annually. So what impacted the fund's performance? The report highlights a few key factors. Positive factors included resilient corporate earnings driven by consumer spending and themes like cloud computing, also Germany's post-election fiscal stimulus aimed to boost growth. But there were negatives like aggressive reciprocal tariffs that raised concerns about trade wars. Rising economic uncertainty in the US also weighed on investor sentiment. Now let's look at the fund's performance numbers. As of April 30, 2025, the average annual total returns for Class A shares were 1.49% over the past year, 8.92% and 6.25% respectively. It's important to note that the MSCI SCA Global Stock Market Index performed better with returns of 12.34% in the past year, 13.59% over the last 5 years, and 9.144% in the past year, 13.5%. Looking at key fund statistics, the fund had net assets of almost $20 million and held 44 different investments. The portfolio turnover rate was roughly 54%. This means the fund is actively buying and selling stocks, meaning it needs to do better than the market after commissions to produce a net benefit. Where is the fund investing? The United States makes up the biggest piece of the pie at 50% of their portfolio. Japan comes in second at 10 to 1%, followed by Germany at 6.8% and Canada at 6%. The rest is scattered around in a variety of countries. The summary in their report shows many investments in common stock at almost 99 cacted. They have a preferred stock investment, but it is fair valued at 0 U10. Lastly, they have money market funds at about 1.8% of the portfolio. Some other financial numbers for the period. The fund had about $87K in total income, but had $123K in net expenses, resulting in a net investment loss of about $35K. They also allocated about 3M to dividend payouts. With all of this information in mind, let's get into the opinion and analysis. This fund obviously invests globally, but their returns do not match that level of investing, and the diversity does not yield better results than just investing on one index. Also, Class C shareholders paid significantly higher costs than Class A for no reason. Also, the fund has net investment loss, so it all just depends on them picking the right investments, which they have not so far. Also, a 50% turnover rate is very high for a diversified fund. One thing that is strong for the fund is that expense reimbursements are high, which could make them appealing to investors. In general, it's hard to recommend this fund when a major index yields better results overall and paying much higher returns on a lower level of risk. Alright, that's our breakdown of Alger Global Equity Fund's latest report. Did you find these numbers surprising? What do you think they should change to do better? Write your thoughts in the comments. Share this analysis with a friend and help them make smart investment decisions, and subscribe for more deep dives into the financial world. Also, don't forget to check out our Discord in the description. Thanks for watching. See you next time.